Hello, my mighty friends. Welcome back. This is the natural gas bull versus bear summary report for the week ending October 31st. So happy Halloween. And if you remember last week, I made a prediction that gas was going to stay low through the end of the week and take a bit of an upward movement midweek, but show just a little bit of relief toward the end of the week. So that is what our crude oil did, but for very different reasons. My forecast was for natural gas, but I think you guys would find this interesting. So this is our crude oil pattern from Monday through today, Friday, and we start off taking that movement. We see a peak here. It's not a bad gain there. That's close to, from its low point, that's close to $3 a barrel of a gain. And then, of course, prices just falling. Now, they're coming back up just a little bit because people are consuming. They're taking advantage of those low prices. But if you follow any of these markets at all, you know that this is a bit of a false sense of security. So go ahead and fuel up at the pump. Take advantage of the fact that prices are dropping a little bit, but store your money away for a natural gas vehicle or even an electric vehicle. That's fine. Either of those will be much, much cheaper in the long run, but the natural gas vehicle doesn't require anything else to actually create the power to run it, where electricity either needs gas or coal to be generated, so your natural gas options are always going to be much cheaper in the long run. Anyway, what natural gas did do, and this is in large part because of LNG exports. So our natural gas movement started off relatively low. It did take that midpoint uptick, and then it kind of started to pretend like it was going to come down as our cool weather set in. But then it just kept on going. So this is close of market today, and of course it always settles a little bit lower. People just stop trading, and if you're going to hedge, then you can get a good deal. But just be careful. Watch these things on Thursday. That's when most of the market storage reports come out. Interestingly enough, our gas storage report for this week was delayed, and that was kind of a bit of a mystery in our industry. So let's talk about some of the factors which could drive the cost of natural gas to go down next week. Remember, there are two opposing schools of philosophy. You also have the mindset of people who are only thinking of the immediate cost, and then others who think more in terms of the bigger long-term scope. So, a bear enthusiast may be thinking the market's going to be bearish tomorrow from one day, whereas a bull enthusiast might be thinking more along the lines of, well, unless you're watching that every single minute of every day, that market's just going to continue to go up steadily, and you want to lock your price while you can, while it's a little lower, so that you're not riding it while it goes up. So some of the things that are in the school of camp, or the school of thought for market going down, might be that our procurement efforts have been very healthy. So we're doing a great job pulling natural gas out of the ground, and we certainly have more of it coming than we know what to do with. We are short for the year. From this year to last year, we are about 336 BCF lower than we were at this time last year. And all through the course of the year, we've been, for the most part, consistently lower in our natural gas storage than we were the year before. This is very important because it's kind of like money in the bank. Money in the bank is always, always better than money you think you have coming in. So that would be one of the factors that people who think, those prices are going to keep on going up, because we need it now. Doesn't matter if we're bringing it in today. We need it right now. And if we need it now and don't have enough, people will pay more for it. So back to the bear drivers, one of the things which could drive that cost down on the subject of needing it now is that North Dakota has been making some positive movement toward not flaring quite as much gas. and by 2020 they aim to have a reduction of 10% of flaring. Now you may scoff at 10%, but North Dakota pulls a whole lot of gas out of the ground, and they're not looking for gas, they're looking for crude. So their operations are set up to capture crude, and when gas started coming out, natural gas, they kind of were like, I don't know, I guess we'll burn it. So it's a bad habit. They know it's a bad habit, and we're working on it. 10% is just a little tiny bit, but it helps. And even right now, they're contributing some on the pipeline. So we're seeing about 444 mmCFD from last year. So we're seeing quite a bit of natural gas come back into the market from North Dakota that we kind of weren't expecting them to do. And it's only going to get better. So people think, well, maybe that'll keep the cost of gas low. We also have some positive movements with pipeline development. So we've got AGL Resources and Kinder Morgan are both working on pipelines which will connect the Marcellus Shale, Rockies gas, and Utica gas, and be able to bring supply into Chicago. Chicago is a big hub for our natural gas. What happens in the Chicago markets, what happens in the Texas markets, those are two very critical markets which kind of set the tone for a lot of the country, because from there a lot of gas goes back out, and plus they're pretty indicative weather regions. So that's a positive movement. Of course, those projects won't be in service until 2017. So there again you have short and long-term factors which play into it. On the bullish side, on things that will continue to make the cost of natural gas go up, we have our weather forecasts. You have mild weather forecasted in most of the central U.S., which bare-minded people think, okay, well then it's not that bad, we're not going to be that cold, we won't be using that much gas. But for the other side of the country, in our northeastern climates, they are already facing days where it's 40 and 30 degrees. So we are seeing an uptick in the cost of natural gas. That's part of it. Even though we're pulling plenty of it out of the ground, that accounts for part of the reason that our numbers are going up. We also have a new electric generation site coming on in the Lower Rio Grande, and that'll be in 2015. So they are planning, they're planning on using quite a bit of gas, and part of that, where they're located close to our ERCOT, which is our Texas market. ERCOT stands for the Energy Reliability Council of Texas. Anyway, they're going to be kind of sucking on some of our natural gas supply. Hopefully we can meet that demand. We're in Texas, for goodness sake. We ought to be able to figure that out, because we certainly have plenty of gas here. But that could make the cost of natural gas go up, because you just have one more party who's going to be consuming it. The other factor is that there's kind of a shortage in coal right now. Not only is there a shortage in our coal storage, but the rest of the nation is all searching very desperately for coal. Russia, maybe we can get some from them, maybe we can get some from Australia, but Australia's having problems with their burn-off percentages of their coal, so it doesn't bode really well for the cost of natural gas staying low, because we're about to head into the winter months. So So that's kind of a factor. And then, of course, you also have the healthy forecast of the gas market to continue rising, because year over year and every month consistently for the year over year forecast, natural gas has settled higher. So with that in mind, I believe that our long-term scope, the bulls have it. I think we'll see mini dips, and get with someone who knows how to time the market so you can capitalize on them. But otherwise, I believe the rates will keep on going up. I think next week we'll probably see a little bit of relief. Again, I'm hoping it comes maybe Wednesday or Thursday, but a lot will depend on the storage report, and I hope you check back to see if I'm right. Thanks.